Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 28th of March. So I've seen a pretty solid week of consolidation on a lot of the major currencies and indices this week, where the markets have really just paused and taken stock of where the levels are really important. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see basically the whole of the week's trading has been just underneath the two moving averages, which is basically flatlining right in the middle of this channel that we've got. We've got a channel here, obviously between 62 cents and 64 cents. And like I said last week, really, whichever way it gravitates to is the way we would trade on this one, but it's really done next to nothing. We've basically hovered in the middle, a couple of long-legged dojis, so we have attempted to go longer and higher, but we certainly haven't been able to achieve anything, and it's effectively ended up right in the middle of the zone again, at the 63 cent mark, right underneath the 20 moving averages. Now, we know that once moving averages are ribboning like they are at the moment, which is effectively flatlining, they are really useless in terms of any analysis that we can get from them. But what we're really waiting for here is price to break through. We know that it's a resistance point because obviously we've had the middle of the channel tested several times over on throughout January here, you can see, and also a little bit at the start of March. So no real surprise to see what it's doing, but until we actually get a break out of this very tight zone, there's really nothing doing on the Aussie USD. I think it could break either way very easily, and I don't think that there would be too much resistance on either side actually. So really, whichever way it breaks, as soon as we get a daily close above either 63.20 or below 62.70, that is the direction I would be looking at moving to the boundaries of the box here. We can see at 64 and 62 respectively. Pretty straightforward trading on the Aussie USD, just a bit of a wait and see for a day to break out of those zones. All right, over to the US dollar CAD, and look, it's similar to the Aussie. It's been relatively quiet in terms of trading. It's obviously at a very strong support zone. We know that this 143 is very strong support. We can see that right through here. Also in a channel, but this is at the bottom of a channel. We've got a bit of a attempted break above the moving averages here. Failed, obviously, hit the 20 moving average and didn't quite get through, but really, it's a bit of a momentum wait. If we get some momentum picking up and we get a daily close above the 20 moving average, so for me, that would equal a 143.50 or above, then we start to target the 144.50. That would be my target for the CAD on the long. But if the 20 and the 50 do hold it up and this resistance holds and we start to see a series of lower highs and lower lows, I would wait for a break below 142.50. That would be a daily break below this level here would be quite important, because this is where a couple of the lows are before it turned around. And then I'd be aiming for that 141.50 as the target. You can see here, this is a little zone that we would be aiming for. But right now it's been a very flat day, or flat week, I should say. You can see that the candle structure has been very tight, and we haven't seen a lot of movement. So just be mindful of that when you are placing your trades, that the movement has been very restricted. So you're not going to see very many pips per day like we can normally see, which is obviously pretty good trading, or has been recently. Very consolidated. So just remember a close above the 20 moving average, and then basically above the 143.50, it would be looking at longs up to 144.50, and if it turns around here and the daily closes below 142.50, then we'd be looking for that 141.50 to 60 area as the target for the CAD. Quite boring, obviously, but that's what it's been like this week. Very quiet week. So the star of the show has been the yen for us again. It's done all the things we needed to do. The morning star pattern that we talked about down here has played out, and it's given us our target of 151. You can see we hit that in today's session, which is great. I'm sure a lot of people probably got that because we were eyeing off that move, and it's been pretty good. If you go to the smaller time frames, you can see, I'll go to the 1 hour first, but you can see the 1 hour was cycling up, so there was no problems there, easy to get into. And also, if you were really even smaller on the time frames and trading intra-session, you can see that we had quite a few. I'm going back because you can see the whole week, but you can see that basically all of the moving averages were doing the right thing. The pullbacks were happening at the right levels, and look, it's hit the 151. So we know on our target and projection for that pattern, you should be out now. You can see the morning star pattern was here at a point of support. So yeah, realistically 151 was the target. Hopefully you're able to get hold of that. look, where to from here is an interesting one. There's not a lot at this level except for a couple of touches. You've got a support level there and a resistance level there, which certainly makes it a role reversal zone, but it is trading above the 20 moving average now, and we did higher high, higher low sequence with Morningstar as the pullback, which is really important. So that's actually really good trading. If we get a break past this level now, for mine, I would rather it trade above this 151 and then pull back and test it again. I wouldn't mind seeing another pullback before I enter it, only because then we know that we're in a zone where we've got two momentum shift swings heading up. And if we get that, the target's going to be the 153.50, like that we can see right through here. So another sort of 150 odd pips from where we are now. So keep an eye out for either a pullback to this level, or if we see continued momentum push through, any pullbacks to a smaller time frame moving average 20, like a 1 hour or 15 minute, I'd be looking at joining in on that. It is possible that it could reverse from here because there is a bit of resistance there. If it does, I would only be aiming back down to that sort of 149 area. So if it rolls over and we start to see a series of lower highs and lower lows, I would be starting to trade in the direction of that 149. I don't think that we got more momentum on the way up than we have on the way down, so I don't think that the down is the better trade, but it is there, and there is no real serious momentum that you would be avoiding here. So I think I would take trades in either direction. I'm not overly fussed. I haven't got a bias at this stage, but there could be potentially resistance here. But breaking that resistance, though, opens it up for another big move. We've got to remember we were in a downtrend for quite some time, so this is the first mini pullback that we've seen. So we've got the low, the higher low, and now we've got the higher high, a breakthrough here, and we're looking at 153.50 as our next target. But good trading on the yen. All right, dollar index, and look, this has been an interesting one in the sense that it did what we needed it to do to get to the 20 moving average. That's what we're always aiming for, 104.50. It did the job for us as well, which is great. It's also in the middle of this little channel that we've got drawn here. We know we've got resistance at 105 and we've got support at 104 here. So it's kind of, it hit that middle of that range today. It's come back, obviously, and trying to test this low. I would be looking for consolidation around this level here, then maybe a push back up. I think the fact that we've gone to the 20 moving average is strong. It's looking a little bit better. It hasn't got a full sequence of highs yet, but if it does pull back to around that sort of 104 area and then pushes past the 20 moving average, I think 105 is the target for this one. So it hit the resistance like we would have expected, but of course the euro is the one we would have wanted to trade because that's the one we always like. And you know, it's come back and done a test of the 20 moving average, which obviously coincides with the dollar index doing what it's done. We can see we've got a very, very big move out. This is only a 38.2 full pullback on a fib, so it's no big deal, but it's a 20 moving average probably more importantly. So I think that we found support at the 20 moving average, or perceived support at this stage. We've also got a roll reversal zone. We know we've got support and resistance right through this area here at 107.80. So very, very important zone for it. And it's a do or die area for it, really, because if it's trading under 107.50 on a daily close, then we're going to start looking at reasonable moves down to around that 106 area, which is around the tops that we can see here, and that would coincide with a dollar index going to 106 as well. So it seems like a big move, but it's not in the context of what it's actually done. So very, very important zone. If this level here doesn't hold up, we're going to see potential moves back down to 107 in the first instance, but 106 is probably the major target. But if we do get a support bounce from here and we're trading back above 108, then we can start to look at those highs again as the target. But very, very mixed at the moment. It didn't do a lot in the last few sessions, even though it's come down. They haven't really been big giant range candles, as you can see, and it is at support. So it'll be very interesting to see how we track from here. All right, and finally, the S&P 500. Look, it has had a reasonable bounce up this week, but it found resistance where you'd expect it to find resistance, and it's pulled back to a level around that sort of 5,700-ish. It's trying to, this is the area consolidation, obviously. We've got all of these highs here from the previous week, and that were rejected. It's trying to find support at this zone. We know we've got previous support here as well from this area here. So no real surprise that it's stuck here. But for mine, it's still trying to cycle higher high and higher low. It's doing its best to do it. But while it's under the 20 moving average, I'm pretty keen on just following the major trend here. If we see continued weakness, I'd be looking at shorting it down to the previous lows. Firstly, up to the 56.50, and a break of that, I'd be looking at 55.50 as the next target as a separate trade. If we get above the 20 moving average again, and more importantly, above the 57.50 with a daily close, then I would be starting to look at long opportunities back up to 58.80. But really, it's one of those ones where either way, I'd be happy to trade it, depending on what direction it went. Higher high, higher low, or lower high, lower low. I would just be following that and looking for my next trades from there. The zones are pretty straightforward. It's behaving itself from a technical standpoint. So really, above 57.50, I'd be looking at 58.80 as the move, and a daily close below these levels here. And I'd be looking in the first instance at 56.50 and then 55.50 as a secondary trade. So yeah, relatively flat week in terms of good trading opportunities, but all of our levels have held up on the ones we needed them to, especially the end. So hopefully you're able to get hold of some of those trades. Thank you very much for joining me this week, and I look forward to seeing you all next week at the same time. Have a great weekend, everyone.